Welcome to the Bulletproof Cashflow podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey everyone, this is Agostino. Today's guest has been in the commercial real estate industry for over 30 years. So aside from being a commercial broker, he is a senior vice president for an international real estate investment management company. He's handled over 12 million square feet of sale and lease transactions between some of the largest landlords in the world. He even ran his own real estate syndication management company for some time, and he's the author of the #1 best-selling commercial real estate books on Amazon. It's called The Due Diligence Handbook for Commercial Real Estate. I'd like to welcome Brian Hennessey to the show. Thanks, Brian, for coming on. I appreciate it.
Agostino, thanks so much for having me on.
So one of the least sexy parts of real estate transaction is something that's most important. That's due diligence. Today, I'd like for us to explore the importance of executing proper due diligence when purchasing investment properties, how we can do a better job as syndicators. But before we can get into it, I just wanted to say that if you like what Brian is saying, you can reach his contact page at impactcoachingsystems.com or just email him at brian@impactcoachingsystems.com. I also have all that in the show notes as well. But on his website, he also has some great resources and training materials as well. But we'll get into that soon. So, Brian, why don't you go ahead and tell the listeners how you got started in the real estate business?
Well, actually, many years ago, I got into the residential end of real estate, but I never really got excited about it. I ended up always, they had a couple guys in the office that did commercial, and I always find myself over there asking them a bunch of questions and telling them about properties I came across. And I just finally came to the conclusion that I was really more interested in commercial than I was in residential. And once I got into the commercial end of it, I really ended up feeling like I resonated with it much more because it was less emotional, although there's still a lot of emotions in the commercial end of the industry. And I found that I just really enjoyed it a lot more. So what ended up happening is I went into the brokerage end of it. And eventually, I had a client of mine who, after I was a broker for 18 years, asked me to come over and work as his acquisition person in his investment firm that he had started up, and he wanted to go around and buy commercial real estate. Specifically for him, it started out as office properties. And the first couple of transactions I did were fairly large. And I really, since I thought I had been in the business for 18 years and, this is an easy transition, it was anything but, because it's quite different being a buyer than it is being a broker when you're buying commercial real estate investments, especially large ones. And the first couple of properties that I bought with them were being sold by a Canadian investment firm. And they were large. One of them was 300,000 feet. The other one was 250,000 feet. And I really was overwhelmed by the amount of information that I had to cover. And the vice president of the investment firm quickly surmised that I was a neophyte when it came to buying office properties, and quickly took me to school. And then what I would do is I'd have these various 5 or 6 legal pads on my desk, and I was writing down what questions I asked and who did I ask them and who owed me what information. And as the due diligence period continued, the heat got turned up by the investor and his real estate attorney and the accountant and then the lender. And so I was overwhelmed, to say the least. I couldn't wait. I'd go home at night and just lay awake and wondering what questions I forgot to ask. Person get me that information, and who else owes me information, and is there anything else I need to be looking at? And by the time we got to the end, I just couldn't wait for it to end. Finally closed the transaction, and a couple of weeks later, I was coming into the office, and I was told that the investor I worked for wanted to talk to me. And so I went over to his office, And I walked in and he motioned to sit down at the seat. And then he got up and he slowly closed the door behind him. And after a long silence, he said, "I can't believe you missed all the information that you had missed when we were doing these transactions." And then we went through it. I didn't know what to tell him. I'm sorry. I didn't realize it. And he just said, "Well, I think I made a huge mistake making you my acquisition person." And that was a real defining moment because it was like, I didn't know what to say, So I went home that night and I couldn't sleep. And I just said, how did I miss all that? And how can I not have that happen again? And I don't want to reinvent the wheel every time I buy a piece of property. So I decided to create a reference manual for myself that had all the issues to review and the questions to ask and the checklists I needed. And so I started this reference manual, and every time I did a transaction and I learned a new lesson, I would put it in there. And so it ended up, when I went back into the brokerage business about 6 years after I had done the acquisition thing, I decided, well, how can I differentiate myself as a broker? And I took my reference manual and I said, I'll just make an investor manual for people to buy commercial real estate with. And I put it up on Amazon, never thinking I'd sell one copy. And I just used it for marketing purposes, but much to my surprise, it started selling. So I was like, well, people must find this information helpful. So I decided to format it and put some stories in it, and it just took off, and it's been an amazing thing. I'm still surprised the amount of copies that are sold, but I ended up doing a video course with it. I do seminars on it, and I get emails and calls from people, literally around the world that have told me that it's helped them tremendously. And thanks so much for sharing the information. And you're right. The first thing you said was it's not a very sexy part of the real estate investment world.
And I think that many people don't even know what to do. That's probably another part of it. They think, oh, great, we're in due diligence now. What does that mean? Let's go look at leases. Let's go do an inspection. And that pretty much that's the end of it.
Yeah, and that was my problem. I didn't know what I didn't know. And that's why I had to create the information. And I think that's the issue with most people. We just don't know what we don't know. But once you start we were buying so much property all over the country in such a short period of time that I had a lot of lessons to learn. But I was bound and determined to memorialize it so I didn't have to relearn the lessons over again. And that is really the beautiful thing about doing due diligence. Once you learn how to do it, it's a learning curve that you can just learn very quickly and just add to it once you have the foundation.
That's right. Yes. Well, I think at this point now, with all the experience since the very first version, you've probably discovered a lot of mistakes, maybe some mistakes that other people have done. Have you since incorporated that into the book?
Sure. To this day, I still like the latest version that I put out has a section in there with physical mechanical that talks about what to look for, what the potential issues could be. Not everybody's going to necessarily need that, but it's extremely important to know those things because you can save yourself a lot of money and headaches. And it's just, when you know what you're looking for, you just sleep better at night when you're going through the due diligence process because you know what the steps are, right?
That's right.
The whole purpose of doing due diligence is to minimize your risk and optimize your value. So especially in today's investment world, people ask me, well, how do you make money in today's investment real estate world? It's just all the low-hanging fruit has been picked, and how do you make money? And I go, first and foremost, learn how to properly do due diligence because that's where a lot of people leave a lot of money on the table.
That's right. A lot of opportunity there. Yeah.
Yeah. Well, because rarely is the value of what you go under contract with. Because once you go in there and you start peeling back the layers and drilling down, you'll find out, oh my gosh, I didn't know this was an issue here. And look at this problem. Oh, wow. And I'm looking through these leases and here's some issues right here. And wow, here's another thing here.
Yeah.
So all of a sudden you're going through this laundry list you're creating. And as you get closer to the end of your due diligence period, it adds up to a lot of money.
That's right.
And so what happens is if you know how to address that properly and put that information together so you can go to the seller and say, look, I've gone through my investigation. and this is what I've come up with. And, in order for this to make sense for me, I don't expect you to give me the whole amount here unless that it's necessary, right? But rarely is it. And you end up negotiating a discount off the price. But you got to know how to do that. And I talk about how to do that in the book and how to document things. And there's dozens of tips and strategies in the book that tells you how to prepare for that. But that's how you get started. Then once you end up buying a piece of property and you've weathered the storm, and you've gotten through that process and you've gotten a discount on your pricing, now your properties, that's what it's worth, right? And now how do you add additional value? Well, chances are you're going to have to do it incrementally over the next 5, 7, 10 years, whatever your hold period is, right? But if you do that properly, then you are going to add some significant value to it, even if it's bumping your rents a couple of 3% a year and lowering your expenses down and increasing some value through some other measures where you can get your rents up. I mean, there's a lot of things you can do. So learning how to do that is critical to adding value and becoming successful as a real estate investor.
That's right. I think that's one component that many people often overlook, is that the due diligence period is an opportunity to actually make additional money aside from the initial financial analysis. Just as you pointed out, if you spot all these other issues that were not readily visible when you're doing your basic walkthroughs or walk around or whatever, even doing demographic, you spot all the problems. But then, as you pointed out too, in your book, you actually even identify, yes, okay, so we located all these issues. We're going to go back now and request some sort of discount off the total. You don't want to look like you're retrading. That language of how to present that is crucial. Otherwise, if you get a reputation of just retrading for haphazardly, it looks foolish.
No. And that's what I've seen people do. They'll make stuff up or just come up with a big number. Hey, I found a bunch of stuff that needs fixed and I need $200,000 off the price. Hey, that's that doesn't fly. You'll get a bad reputation. And let me tell you something. It's a small little world in the investment real estate world. Brokers all talk. It's the old Pareto principle, 80-20 rule, right? 20% of the guys are doing 80% of the transactions. So word gets around that he's a retrader, don't bother, You don't want that reputation.
Exactly. And if you're difficult to work with, nobody will even want to consider you if they do find a deal. So absolutely. Due diligence is a critical component of this.
Yeah. And the other thing I always tell people is this is really a people business. Okay. People buy people. Yes, real estate is the commodity, but it's like anything else. If you're not somebody that knows how to properly deal with people and present things to them, you're going to have a tough time, right? Because the golden rule is really working all the time in this industry. So you got to know how to properly present. And that doesn't mean that each and every time you're going to get a discount off a property. Some people are saying, no, I'm not going to sell it. And there's plenty of times that I've canceled the escrow.
Mm-hmm.
And then a few weeks later or a few months later, you get a call. Hey, we were in escrow again. It fell out. Are you still interested?
That's right.
Yeah, I'm interested, but it's not at the price we said it was. My price is probably going down now because, the embers have cooled here. So, has anything changed since we've, talked last? So, that's the kind of stuff. And then I've had people, you cancel the escrow, they never call you back, which is okay because I tell people you've got to have a walkaway position. If you don't, you're going to end up getting in trouble and then you fall in love with your piece of real estate. And I'm a big believer in, if you take the emotion out of it, you're going to do much better.
Absolutely. So we talked a little bit about examples of some mistakes. Can you think of, maybe you can tell us a little bit about what was a big one? What was one that you saw or learned from?
I'll give you an example of something that really highlights and underscores the need to, for instance, when you're doing your due diligence, you've got to be assertive. You've got to be confident. And if you learn how to do this stuff properly, you are confident, right? So when you come off as more confident, that doesn't mean cocky or brash or any of that stuff. What it means is just when you're talking to people, they say, okay, this person knows what they're what they're talking about, right? And if they say, for instance, hey, I'd like to interview the tenants in the building. Well, no, nobody's interviewing my tenants. I've had sellers tell me that. We don't even know if we have a deal yet, and I'm not going to risk tenants leaving or whatever the case may be. And it's like, well, wait a second. Of course I need to interview the tenants. Why wouldn't you want me to interview the tenants? I mean, you got something to hide here? Well, no, of course not. Well, then there shouldn't be a problem with me interviewing the tenants. And then it's a matter of, well, I don't want you talking to everybody. So then you end up negotiating which tenants you're going to talk to. And of course you want to, if you're talking about a, retail, industrial, or office, or then you're going to talk about which ones are expiring in the next 12 to 18 months, right? The bigger ones, obviously. And what happens if they're adamant about, no, you're not talking to them, then that's a huge red flag to me. I'll just say, well, you know what? If I can't interview them, then I got to pass on the deal. Chances are, if they say, okay, pass, well, they're probably hiding something. And I've heard plenty of stories over my career where people went ahead anyway and bought, and then wondered, why did that 25,000 square foot tenant move out 6 months later? Well, it's because they claimed bankruptcy. And they didn't want you to know. They didn't want you to go in there and see there was only 5 people working in the space, right? So I had one. I'll tell a quick story about a hotel. We bought one hotel in Dallas. It was a 377 room full service hotel. And it was being sold by a large international hotelier. If I said their name, you would instantly recognize it. But this was kind of the bastard stepchild, so to speak. They bought it. It wasn't their flag. And they were trying to sell it. It was a tough economic time. So we made an offer. They didn't accept it. And then they came back about 3 or 4 months later and said, hey, it's still available. It fell out of escrow. Are you interested? Yes, but at this price. Okay, well, we'll sell it at that price. So we're going through the due diligence. I flew out there. I'm interviewing the vendors. And one of the vendors said to me, and by the way, I told them I needed to see all the guest rooms. And they said, no, that's much too disruptive to our guests. We can't allow that, right? And then at one point they said you could see 25% of them. And I said, no, that's not good enough. But in the meantime, I'm busy doing my due diligence, trying to figure out how to approach them with this. And one of the vendors told me that, that these people have a huge mold problem and there's a lot of rooms out of service here. And I said, no, I didn't know that. Could you shed a little more light on that? Do you know how many rooms? And he says, no, it's quite a few though. I said, okay, well, thanks very much for sharing that. So as soon as they left, I picked up the phone. I called the seller and I said, I heard that you have mold issues in the hotel here, and I need to see each and every one of these rooms. And if you can't let me do that, then I have to cancel the escrow. And they said, okay, fine. So we went through all of the rooms, and it turned out there was 55 rooms that were out of service due to mold issues. And some of them I wouldn't step foot in. They were so bad. So we ended up getting a $2.5 million discount off the price. Now, the point to the story is, does that mean we couldn't have sued him afterwards and gotten some money out of him? And yeah, we probably could have, but it probably would have taken years and a lot of legal fees and hassles, and who knows how much you would have ultimately got. But by insisting on walking all the guest suites, we were able to negotiate that discount and get it done. And that's just one. That's a big example, but there's other examples I can tell you about when I was making offers on apartments. It was usually 100 units to 250 units, and then we would go in, and I would insist on walking all the units. And some of them were from nationally known apartment owners. And we found that some of the units were either smoke damage or mold damage, and had been appliances taken out because they couldn't rent them, so they just used them to fixturize other units. Which means that, is it the end of the world? No. But what it does, it adds to the cost of the acquisition when you have to go in there and
That's right.
refixturize and fix up, spend 25, 30 grand on a unit, right? So, and then there's another one. We were buying 150 units in Colorado, and it was an off-market deal. Broker told me about it. I went to see it. It looked very promising. And so I was only there for a few days. So I asked if we could, while we were negotiating the purchase and sale agreement, if we could get the physical inspection going on. And the broker said, no, he would never agree to that. And I said, well, just ask him if we could just do that, because I'm only here for a few days and he doesn't want to spend a bunch of legal fees on something if there's an issue here. The guy called me back, said, okay, agreed to it. So I went over there and I met an army of contractor guys, inspector guys, and they went through it. And in the meantime, I'm sitting there talking with the property manager, and the main contractor guy came in and he asked if he could speak to me privately. And I stepped outside the apartment and he said, you've got some issues that are being hidden here. And I said, like what? He says, come here, I'll show you. And he showed me some under the stairwells. Some of the footings and stuff were covered up with boards and mud, and there was cracked structural footings. And I said, whoa. I said, this looks like it could be pricey. He goes, well, it could be if there's a number of them. And I said, well, do me a favor. I have to go to the airport after this, but call me as soon as you get finished here so I can find out what we're looking at. And I was sitting at the airport waiting for my flight, and I got a call, and it was him. And he said, well, we got to uncovered a number of issues. I said, well, speak to me in dollars. And he says, well, there's a lot of those structural things being covered up, and it could run you anywhere from 1.5 to 3 million. I said, well, then this is not a deal I want to get involved with. So I canceled. I just said, no, I'm going to pass. But had I not asked and insisted on trying to, inspect while we were trying to get under contract, I would have had to pay to negotiate a purchase and sale agreement, and then, it would have cost me a bunch of money.
Absolutely. Yeah. There's already that cost, not to mention your time that goes into it up front. And just as you pointed out too, yeah, maybe you can go sue them after the fact, but who wants to get involved with all that? It's just a mess. Yeah.
It's a mess. And having gone through it before, it's not fun. And it's just a very messy, stressful, expensive way to go. So I try to minimize that as much as possible.
Yeah, absolutely. I mean, some of the things that we consider in our due diligence, aside from performing deeper inspections, is also demographics as well, as far as understanding the local area. How much of that do you take into account as far as understanding, things like crime rates, employment, things like that?
Right. Job growth, population growth.
All of it, yeah.
All of that stuff you want to look at. And because it's going to show you trends, historicals, and once you get a flavor, and also what I like to do is I'll go play prospective tenant if it's a property and go check it out. I want to see what my competitive set is doing. I want to see what I'm competing with, what's going on out there. Do some deeper dives in your due diligence about vacancy factors and all that stuff, because it's going to tell you a lot. It's going to paint a big picture for you, and that's what you want to see. You want the 30,000 foot view of it, not just the 5,000 foot, right? Because it's exciting when you're looking at it. Wow, we could fix this up and get the rents up and everything. But if you start seeing trends that are negative, and it's like, wait a minute, why is this happening? And what's going on here? And it's just, is it fun? Not necessarily. Is it a lot of work? Yeah, it's work. But hey, you don't want to find this stuff out after your hard-earned money is invested, or if you got investors and they've got their money in it. Now you're looking at a lot more work, and who knows, your golden opportunity may just turn to lead.
That's right. I mean, there's so many of these deals that I actually know people that have done, and they got burned just because of this exact thing. They just got lazy on the due diligence. They got caught up in the excitement of doing a big deal. And we're going to increase rents. We're going to paint. We're going to do all these great things. We're going to repave the parking lot. It's going to be amazing. And then, of course, when they fall flat as due diligence and they got caught. And yeah, not a good time.
I've got other stories too, but if you have questions for me, I'll just soon answer those as well. So
yeah, well, really, I want to also know a little bit about your new book they have coming out, the Value Add.
The How to Add Value Handbook for Commercial Real Estate?
Yes.
What that is, I found that over the years, a lot of people were making very similar mistakes all the time. And a lot of it has to do with their approach to the business, their mindset. and a lot of the stuff that can be avoided. And one saying that you'll hear me use a lot is stepping over the dollar to pick up the nickel. And you see that being done constantly with all different aspects of the business. Either they're trying to save a commission, or they're trying to save money on contractor fees, or all sorts of stuff. I just tell people, don't fall into that trap, because you're really just costing yourself a bunch of money at the end of the day. As you get better at it, you can figure out where you can realize some savings. But a lot of times I see people just doing silly things. I mean, they'll have a great looking piece of property and they're going to have a for lease by owner and have it sit out there. Well, the fact of the matter is, if you got a lot of space sitting vacant, unless you're in such a hot area that you're just going to be fielding tons of calls, you want somebody working on it that's working it, right? So you're trying to save a 5% leasing commission, but it's costing you 95% of the rent. It's like, why are you doing this? Do you really want to, are you available all the time? Are you talking to all the players out there and all the brokers that are working the deals? And so why go that route? At the end of the day, you're probably, after it sits for a couple of 3 months, you've already blew that fee.
That's right.
Well, now what are you saving? So it's just, I tell people, there's a bunch of stuff in the book, stories that I tell and examples and things you can do and to create value with your property. So I've gotten good response. People, like the information. So I think it's helpful and people should take a look at it. It's also both my books, the Due Diligence Handbook for Commercial Real Estate and the How to Add Value Handbook for Commercial Real Estate, is available on Audible and iTunes. So
I'm going to put those in the description below as well, the links for those as well. But with all those stories, you're a very experienced broker. What advice would you give to new investors that are getting into this business as far as establishing relationships with brokers?
Be credible. Show up when you say you're going to show up for appointments, and don't be working huge crowds of them. Find some that you can build a rapport with. Once you establish yourself as a credible investor, especially with the brokers, because there's always a handful of brokers that do most of the deals in areas, generally speaking, then they're going to see you as a credible investor and you're going to get deals run by you. But it's very important to make sure you maintain that credibility, because as soon as you do something stupid like skate them or go around them or something, then it's very difficult to repair those mistakes. It just is.
Yeah, we were actually talking about that just before we hit the record button here. It's a very small world. All the brokers know each other, and if you mess with one, they'll know about it. You retrade, everyone knows about it.
Yeah, brokers love to trade stories like that, and especially if you're a friendly competitor, then everybody's trading their stories. Oh, that guy, no, don't deal with them, or that person, or whatever the case may be, or that group. You stay far away from them. This is what happened, and then it's like, once you hear that, it's like, it's hard enough once you get everybody on the straight and narrow and trying to make a deal, and you have to still fill in the gaps and everything. So why would you want to deal with somebody who's not honorable?
Exactly. Yes. Before we go into the mobile round, I did want to talk to you about your coursework, or your course rather, for due diligence. So please tell me a little bit about what that covers, and maybe go into how does it work.
Okay. So my video course is a 16-module course, and essentially I do the deep dive on how to go in and conduct due diligence. I actually do a mock tenant interview in there with someone, and I give a lot of examples. Essentially, when you're through with the course, and there's a quiz at the end you could take, a test, I should say, and if you get 70% or better, you can get a certificate of completion and a digital badge to put on your LinkedIn, if you so desire. And there's also PDF notes that you can download and review. And by the time you're through with the course, which with the tests and everything takes about 4 hours, but you will feel much more confident, and you will be much more self-assured. So when you go to speak to any brokers or sellers out there, they're going to know that you know your stuff. And they're less likely to play games with you when you're coming from that position. And then you're just going to feel better about moving forward on an investment after your due diligence period because you've covered all the bases. I mean, that's really what you're looking for is you want to optimize your value, right? And minimize your risk. And that's what this does. And I've had people tell me, oh, I wish I would have watched this before I bought my last property. I could have saved myself a bunch of money. And it's like, well, now and going forward, you learned your lesson. So, but what I'll do for you, Agostino, is for your listeners here, I will offer a 25% discount off the course price, but you got to put this code in. You have to go to courses.impactcoachingsystems.com. And then when you go to enroll, you put in the code MR25, and that'll give you a 25% discount off the course price, which is about the price of a good real estate attorney's 1 hour of their consultation. So, yeah, you're going to have a lifetime of valuable information you can take into your real estate investment business that's going to save you many, many more times exponentially than the cost of the course. So,
Excellent. Very much appreciated. Okay, well, let's go into the mogul round. So what I'll do is I'll ask you a series of questions and love to get your feedback on. So you ready?
Yeah, sure.
Excellent. All right. So if you can give your 20-year-old self a word of advice, what would you say to him?
I would say that don't be afraid of failure. Failure and success are interrelated, and that's how human beings learn. And obviously, you want to get as much information before moving forward on something as possible, but don't be afraid to make mistakes because that's part of life, and you're going to survive. So there's no such thing as success without any kind of failure. I've never met anybody that I've dealt business with that can't talk about failures. In fact, you'll learn more from your failures than you're ever going to learn from your successes. So that's what I would tell my 20-year-old self. The other thing I would say is don't worry about what other people are thinking about you because they're not thinking about you. They're thinking about themselves.
That's right.
If you ever heard the old saying, in your 20s, you worry about what people are thinking about you. In your 30s, you don't care what people are thinking about you. In your 40s, you realize people aren't even thinking about you.
Yes, that's actually true.
Yeah. Anyway, that's what I tell my 20-year-old self.
All right, excellent. Now, what are your 3 most influential books and why?
My number one book, it isn't about real estate, but it's about life, and it's called The Autobiography of a Yogi by Paramahansa Yogananda. That has done more to make a positive change in my life than anything I've ever read. And then I would say, you want me to talk about real estate, right? So real estate, there's a book, Everything You Need to Know About Cash Flow by Frank Gallinelli. Have you ever read that one?
Oh, I never heard of that one. That's a good one.
That's a good one. That's a classic. I highly recommend that because once you understand how cash flow works and the components of it, you're really in a much better place in terms of looking and evaluating real estate investments. And there's a number of them, but I also like The Complete Guide to Buying and Selling Apartment Buildings by Steve Burgess. I thought he did a good job.
Oh, yes, he did. I read that one. It's very good.
Yeah, and I mean, those are probably the 3 that I tell everybody that, that are my favorites.
Excellent. Well, I think that first book should really help the next question. And what is your philosophy for life and success? Like, what keeps you motivated?
Well, as you age, you realize that it's nice to be successful and make money and do all that. But at the end of the day, it's really about people you love and the service that you offer out there. And what's interesting is when they talk to people that have gone to the other side, had the near-death experiences and have come back, and they all say the same thing. It was all about the love that they felt, and the message they got is just serve others. And that's what we're here for. So if you got that straight, then when you proceed in life, you're going to look at things through a different set of lenses, and you're going to be in a much better spot where you're able to help yourself and help others. And once you get that, it's like having a built-in compass.
Yeah, absolutely. All right, guys. Well, if you want to follow up with Brian, you can reach out Brian at impactcoachingsystems.com. You should also check out his website. He has so many great resources and training material out there that'll help improve your due diligence process tremendously. I'll include a link to his books in the show notes, and certainly, of course, the discount code to his training program. There's so much value in this discussion. Thank you so much for your time, Brian. I truly appreciate it.
Absolutely. And I'll offer one more thing to your listeners is if you have any questions that you want to ask, consider me a resource. You can reach me according to my availability, but if you don't get a hold of me, I'll leave a voicemail message and I'll call you right back. But my mobile number is 818-371-0311, and I'm happy to answer any questions you might have regarding the due diligence or real estate investment stuff that you have questions about. Feel free to give me a call.
Excellent. Much appreciated. Thank you so much.
Okay, Agostino, thanks so much for having me on. Really appreciate it.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast. For more free podcasts, articles, videos, and resources, go to www.bulletproofcashflow.com.